Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets buried in corporate filings. What happens when a company says, oops, our past numbers were wrong? Get ready because we're diving into Vestand Incorporated's latest report where they're telling the world to disregard a whole bunch of their financial statements. This is big. Make sure you hit that subscribe button if you want more straight talk about company finances. Oh, and we have a Discord server linked in the description below. Come join the conversation. So, what is going on here? Vestand Incorporated, the company behind the VSTD ticker on the Nasdaq Capital Market, has issued what is called a Form 8 cake, an important report that tells investors about significant events. In this case, the big news is that their board of directors has decided that some of their previously released financial statements just can't be trusted. That is right. They're saying investors shouldn't rely on them. This announcement came out on the 29th of October 2025. The company states that based on a report from their audit committee and an independent accountant's report from Owen Chung LLP, they found issues. This means a whole lot of their past financial reports, both annual and quarterly, are now suspect. We're talking about a long list of financial statements stretching back to 2022 and even into 2025. This includes audited financials for the years ending the 31st of December 2022 and 2021, and numerous unaudited quarterly and semi-annual reports. It is essentially a confirmation that a significant chunk of their financial history needs to be revisited and likely redone. To fix this, Vestand is preparing to restate these financial statements, which means they will be filing amended reports with the SEC to correct the errors. But the big question is, why did this happen? The board started an investigation into possible inaccurate disclosures, inconsistent record, keeping and other actions of the company's past executive management. To help with this, they hired Owen Chung, an independent accounting firm, to look into specific financial transactions like money moving around between different parts of the company and how they recorded journal entries in their books. This independent report, released on the 21st of October 2025, found problems. They pointed out things like missing information, documents that weren't there, and other mistakes in those old financial reports, which they call inaccuracies. The audit committee, after reviewing this report, identified 5 main areas for further investigation. First up, they're looking into loans made to and from other companies within Vestand's own group. This could suggest money was being moved around in ways that weren't clear or properly accounted for. Second, they're examining bonus payments tied to their initial public offering, or IPO. This is a critical period for any company, and issues here could point to improper compensation or accounting practices. Third, and this is a big red flag, they're investigating fictitious or improperly recorded debts totaling about $700,000. Fictitious liabilities mean debts that shouldn't exist on the books or were recorded incorrectly, which can seriously distort a company's financial health. Fourth on the list is a warrant issuance to Haring Company. Warrants are essentially options to buy stock, so this involves looking into how and why these were issued. And finally, number 5, securities that were issued without the proper go ahead from Vestand's board of directors. This is a serious governance issue, as major decisions about issuing stock or other securities require board approval. The company itself is still working through all of this. They admit that the full impact of these restatements is preliminary and could change. They can't even say yet exactly when they'll be able to file these corrected financial statements. What is more, Vestand is looking into possible legal action concerning these problems. They're also planning to claw back any incentive, base compensation that was wrongly given to executive officers. Because of all these mistakes, management has concluded that there are serious weaknesses in their internal controls for financial reporting. Think of internal controls as the company's system of checks and balances to ensure accurate financial reporting. When these are weak, it opens the door for errors and potential fraud. To try and fix this, Vestand has made some changes. They've boosted their accounting team by appointing Jai Ho-yoon as their new chief financial officer, a move that was actually disclosed a few days before this report. They've also brought in Andrew Yoon as a new member of their board of directors and as their chief compliance officer to strengthen their internal controls and corporate governance. The audit committee has been in discussions with O and Chung about everything I've just mentioned. On top of that, Vestand has decided to appoint a new independent accounting firm as their auditor, signaling a clean slate is desired. Now, the report includes the usual caution about forward-looking statements. This means any statements about the future are based on current expectations and could change. They warn that things like delays in getting the restatements filed or new information popping up could impact their financial statement There is also uncertainty about how effective their internal controls and disclosure procedures will be going forward. Potential legal or regulatory action, and how the market reacts to all of this are also big unknowns. This report is pretty much all about the accounting issues, so there aren't really any significant financial tables to dive into for current performance. The main exhibit listed is the cover page interactive data file, which is part of the electronic filing. Finally, the report is signed by Ju-won Kim, the Chief Executive Officer, on the 31st of October 2025. So, what is the takeaway here? Vestand Inc. is facing a serious reckoning with its past financial reporting. The decision to admit that previous statements can't be relied upon is a major event, indicating deep-seated problems. The fact that they're investigating fictitious liabilities and unauthorized securities issuances suggests a potential for serious misconduct. The company is trying to shore up its defenses by bringing in new leadership in finance and compliance and by seeking a new auditor. However, the uncertainty surrounding the restatement timelines and the possible legal actions paint a picture of a company in significant turmoil. From a Warren Buffett perspective, this is exactly the kind of situation that sends up major red flags. You want to invest in companies with honest management and clear, reliable financials. Vestand's current situation suggests that neither of those are in place right now. The company's direction is currently focused on damage control and rebuilding trust rather than on growth and strategic expansion. The main opportunity is for them to successfully complete the restatements and implement robust internal controls, which could allow them to rebuild investor confidence over time. However, the risks are substantial, including continued investor skepticism, potential penalties from regulators, and the possibility that the restated financials reveal even more problematic findings. In conclusion, Vestand Inc. is currently a company in crisis mode, dealing with a fundamental lack of trust in its own reported numbers. Until they can satisfactorily restate their financials and demonstrate effective controls, investors should be extremely cautious. Alright, that is our breakdown of Vestand's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.